Hey, it's Kimosabi here, giving you a little update. We have S&P 500 index, and boy, does that look like poop. Um, I was kind of looking at this as a completed move, and now it's looking more and more like it. The only other leg that I can match with current leg going down is the one right in the middle here, which invalidates if this price action gets down to 5,100. But this actually looks a lot like this leg. So let's draw that out. The way that I've been kind of looking at this is an ABC kind of moving up to there, and then matching this ABC with this ABC. Then finish this off with that last move higher. So that can look like a very completed move. And now what's coming off of here really looks like that leg from 2022. If so, that would still have a little bit lower to go, but essentially you got the impulse and a little extra impulse, and maybe a little extra, maybe it comes down like that and might look like an ABC. And if it does get around 5,100 or so, I would look for this leg to repeat to give you the sell setup right at 6,000. So you'd have a lower low, lower high. Your stop loss would go at the high, but yeah, it does look like a completed move and something else is happening here. It could be sideways consolidation for months to come, or this is the start of something that's going to lead to much, much lower in coming years potentially. Now, if you're looking for a mega crash, it likely doesn't come right away. These things take time. So even if you do have a crash, you would have something that comes down really far, consolidates, pops up, gives you a bull trap, and then comes down. And this could take 6 months. So something to be cognizant about is these things do take time. But just looking locally there, if that matches that, I would look for a retrace, 6,000, look for liquidity up here, and then stop loss goes at the high and potentially more down coming. If you zoom in even more locally here, you may end up having a sell set up just on this, and then you repeat that leg down like that to come take all this liquidity before then consolidating and bouncing back up for the uh, longer sell setup, something that you could hold for a while. Of course, the stop loss goes at the high. But this is a daily chart, and you have a high, a low. That's a lower high now because you have a lower low. So you would expect a lower high potentially to be put in. If you want to buy this, if you're a buyer in this market, you kind of got to wait for a higher high. Try to buy the higher low for a push up, initial take profit there, and let a little run for taking out the all-time high if it wants to do it. But you need a change in behavior, a change in structure here. And I don't know if you're going to get it this week, maybe next week, but that's a valid sell setup to me. A little ABC down in the middle. There's your sell. Take it down, potentially taking out those liquidities. And what does that mean for our good buddy Bitcoin? Well, Bitcoin has green days going on here. This is 2 green days as the S&P 500 is having 2 red days. So there is a decoupling happening. How extensive will the decoupling go? We'll see. It's not something that you hang your hat on, but we're at an area in all charts and all markets and socioeconomic and geopolitical areas where something like this could decouple greatly. The U.S. economic policy is something that hasn't really been done in decades, and the debt markets are doing things that really hasn't been done in decades. It's definitely changing into a different environment where the economics and the charts could get very, very surprising. They could be doing very surprising things. Am I bullish on this chart? I mean, if you look at weekly swings, yeah, you're still making a higher high here. Here's your higher low, or it's working on putting on a higher low. This might take some time. That's fine. But I'm seeing a pattern that says that this thing is ready to move up coming soon. As long as that low is not taken out at 76,500, would really rather not see that taken out. You kind of want to see strength. You want to see Bitcoin holding strength as the stock market is kind of falling apart. Bitcoin holding strength, kind of acting like gold or attempting to act like gold here, to be a store of value in economic uncertainty and potentially geopolitical uncertainty. Who knows? Um, I guess we'll see what the charts say afterwards and we'll explain it later. Drawing out things on the daily. Well, as far as matching patterns and stuff, I mean, technically you have an ABC there. I don't know if that low holds. I think there's liquidity down here that's likely to get taken. My expectation was a sub 80K read on this would make sense just to get people that are really aggravated out of the market to shake a few turds loose, if you will, um, to have the price come down here and grind them out a little bit. So they're like, screw this, man. And it might just be mimicking something like this. And it's just grindy. And then from there, you start making an uptrend and start taking out some of the highs because the tariffs announcement or whatever that had this major rejection, it was kind of anticipated. I mean, the market here is basically taking the liquidity. If you draw the trend lines, you had a breakdown that triggered the shorts, you had a break up that triggers the longs, and a break back down. It just it's just triggering emotions in people, and that's what markets do. And you really have to, I want to say, not zoom out, but like take a step back and just look at what the actual trend is doing to understand that the market's just looking for liquidity. It's fishing liquidity. The manner in which it gets the liquidity is it needs to get people long in order to stop them out, in order to take over your position. It needs you to be aggravated to take your position. Um, that's just kind of the way it looks to me. But this move down here, slow and steady, pop up, grab liquidity. I mean, this is just ABC. It's just liquidity, liquidity, liquidity. So watch for these liquidities to potentially be taken just sub 80K. Kind of makes sense. You already did tag the stop losses from the original low from a few days ago. What was that, 3 days ago, 4 days ago? Um, this did take those stop losses ever so slightly. You do have a few over there. Do they get taken? I don't know. Um, am I interested if it comes down there? Yes, because this would be basically a reaccumulation and you're just chopping about in here. That would be your spring, and then upwards you go. We'll check that out on lower time frames. But coming down from all-time high here, this nice trend down leaves a lot of liquidity. If the market is short, all of these wick highs that weren't swept, they're all stop losses. And now you have major liquidity up here with this quote unquote double top. Um, that's a reason why I did not short the market. I wanted a little bit higher. If you would have taken out that previous high and then rejected, then I'd be more inclined to short the market. But I don't like shorting double tops. I don't like going long at double bottoms. Sometimes that's all the market gives you. You have a double top and a double bottom. I'd really like to see some liquidity taken, preferably here on the lows, so I can get long, and I'd first target those liquidities up at like 90,000. Am I going to get that sweep? We'll see. But I'm ready for what the market will give me. It has the potential though, with all of those highs that weren't swept. this has the potential to just wick up really quick, take them all, and then reject back down. Definitely something to be ready for, because there's a lot of liquidity there, and the market could just go and grab that real quick, immediately reject, and start making new lows. That would be a bull trap. That would be pretty bad. Locally, your trend is still down. That made a higher high than that high, but then you closed the lower low. Now we got a lower high, so we might be getting lower lows. We might continue trending down here on the daily. And validation of that is, of course, a daily candle close, higher high, preferably above 88. But even if you get above that closure from Wednesday, you just close a daily candle higher high, buy the higher low. That's a potential for your reversal of trend, and then your stop loss goes at the low. And then if you're taken out, look for an uptrend to start from the liquidity. Oh, nice. I'm on the 4 hour chart here on Bitcoin. Seeing some good things. I did not see this for a bit here. We noticed we swept the low, so we might have divergence there or something like that going on. Not the main focus. The main focus is closing a 4 hour above there. So if you close a 4 hour higher high, taking this liquidity, expect a rejection, but look to buy previous support to act as support again. Your stop loss goes at the low. There's a tight risk versus reward for potential bounce up to, test this 86,200 breakdown area, because you didn't have any real distribution. This was just straight down. And that also plays on the emotions of investors, especially newer investors that aren't accustomed to this and seeing the way that the market is. You could say it's manipulated, but it's really just like the market maker taking the opposite side of positions of traders, because you had that breakout, potential breakout. So it's like, well, I don't want to miss the move up. So getting long and then immediate reversal. It's kind of anticipated, which I think 2 or 3 videos ago I proposed this exact scenario. Um, Kind of looking for sub 80, but it doesn't have to. These lows were taken, so you're going to get a bounce and then reversal, or you're going to just get a bounce and then take the lows out properly. But if you close a 4 hour higher high, look for the higher low at 81, no, 82,000, wherever that was before that exact price. Just look for previous support to act as support again. Gives you tight risk versus reward there, and see if it maintains a higher low. Or it could wick on a 4 hour basis, wick down but still close back in here. That becomes your stop loss, and that's an even better trade setup, in my opinion, because you've already established an uptrend, but you got a wick that took the liquidity, but you have a higher high, higher low. Expect the higher high, expect a nice reversal off of that. And watch your emotions as well. This can cause emotions in people, especially the moves down that are really quick, which are usually, well, they end up being decent buying opportunities if this scares the market. Um, so, yeah, this doesn't look great. You don't buy immediately because it can definitely continue. But if you start having a change in behavior, those are great buy setups. So, check yourself, um, and watch what the market is doing on a daily and a 4 hour. And, if the trend starts reversing here with a higher high, get in at a higher low. If it goes way up here on a 4 hour basis, then try to buy that higher low. You don't have to rush in and get wrecked like this move. If you missed that move up, then you weren't paying attention to the trend, because it gave it to you right there. You had a high, you had a low, you closed a higher high, you got yourself a higher low, and went up for liquidity. So similar thing may be going on in here. Maybe you just get an ABC up and that's all you get. But pay attention to trend and liquidity. And watch out for a short squeeze potentially over the weekend. That's something that I'm kind of eyeballing myself. Well, if we just go in the context of kind of the bigger picture here, I'm kind of right now matching this current price action with what happened last December and expecting a potential breakout to happen. The last large breakout, this happened over a weekend. And in my opinion, that was to get the CME traders who can't trade over the weekend, is to get them to buy the all-time high for a distribution pattern. So, 8 months of sideways led to a weekend breakout, left a gap in the chart, and that gap did not get filled for 3 months, 4 months. So yeah, the CME traders basically had to close because they were way underwater if they were short. And something similar might happen here, that you're not necessarily getting the buyers to step in because they don't want to buy over $100,000 Bitcoin because it's kind of expensive. So what you have is forced buyers, and they may do the same thing again from here. This might be closing up Friday, closing up, at 90,000, and then over the weekend, just kind of mosey on up to 100, 101,000 to close the weekly candle, and then you start that process of short squeezing where the CME traders have to close, and then it just buys it up, and that gives you your weekly cycle low and double. So watch out for something like that to happen over the weekend, because the way that this price action accelerated before was on the back of a short squeeze. I don't think it happens this weekend, but I'm kind of got the idea that it happens next weekend. So just drawing this out, having this mimic that, and you had a very nice choppy volatility, which was the Darth Maul candle I spoke about in previous videos, similar to that. That's kind of what's going on here. So from here, what I would like to see is this leg repeat, just ABC up from somewhere in this vicinity, something like this, to come up here to 95-ish, 94, 93. Doesn't really matter. But then repeating that leg, getting a few days of downside back down to this original area, so that people are just sick of this and just be like, come on already. Quit sticking in this range. Which would also actually look like a distribution pattern as well. And then you'd have a swing up, swing down, so you'd definitely get some shorts coming in if that type of price action plays out. And then your confirmation of a potential short squeeze coming would be repeating that leg and breaking that high and holding, maybe below 100 but above 95, and a little reaccumulation there before some kind of weekend short squeeze. That's currently the way I'm looking at it. Does it have to play out? No. But I would like to see a higher high close, especially on a daily. In a daily, you really want to see above 88,000 for a daily candle close higher high so you can buy the higher low. And that would kind of mimic this price action here from around current areas, getting up there for a higher high, then you buy the higher low, and you definitely want to get long on a reaccumulation above this block of crap, getting back into the upper portion, which is the stronger portion of the rally, and we'll watch for this thing to just break out. We will see. There's definitely some bearish indications on the chart that should not be taken lightly. Your stock market S&P 500 is not doing very well. It's pretty sick. Gold, it's pretty extended. So this certainly can just fall out of bed, and we're down way lower than we would expect. And then you're tackling the previous lows from last year, which would be a massive liquidity grab. And then you have this as your A, some kind of B wave, and C. So definitely keep your stops tight so you can have a good night. that's my thoughts for now. So we'll see what kind of closure we get here on Friday, the weekly closure. See if we have some strength coming in tomorrow. So that's what I got. Keep your stops tight and have a good night.